Now I know that most biotech stocks are like a sell the news situation, but 30%? 30% really for Senseonics stocks to fall on FDA approval? Well, hey guys, welcome back to another video. I'm Richard Allan. Thank you so much for joining me for this crazy Senseonics update. We have what we were waiting for. We finally got FDA approval for their 6-month implantable continuous glucose monitoring device, and the stock crashes on this news. Absolutely crashes. But I'm going to show you some numbers just to give you a better perspective, because the stock is actually up over the course of the last several weeks. So we're going to talk about that and I'm going to give you a real perspective of what's going on with this stock right now. But definitely a sell the news situation. 30% down at one point. It's recovered a little bit, but we're going to talk about the actual news and the guidance that was given from the company. And it's not fantastic guidance in terms of revenue. That's partially why the stock dropped so much. But it's kind of everything we've been waiting for. Finally get FDA approval for the longest implantable continuous glucose monitoring device on the market right now. So this is fantastic news for the long term, but what do we have to wait for going forward? We're going to talk about that towards the end of the video as well. So thanks for joining me. Now, if you aren't familiar with the previous EverSense system, was a 90-day or 3-month implantable solution for people with diabetes. This was a product that a lot of people were excited about, even at the 90-day level. Now we have a 6-month or 180-day FDA approval. This is something we've been waiting for a long time. It's exciting news. But why the heck did the stock fall 30%? What is happening? But if you actually take a peek at the charts over the past couple week period right here, from this bottom to this top over here, the stock was up over 70%. Come on, you got to keep that in mind. So when you see this 30% drop from here to here, yes, but the stock is still up 20% from that bottom that was created over the past month. Keep that in mind. This stock got down to $2.15 just on January 26th, just a couple weeks ago. So you got to kind of keep that in your head when you're thinking about this stock. And this market is absolutely bonkers right now. We're going to see an emergency meeting on Monday of the Fed. They may raise interest rates a little sooner than expected. That will spook the market as well. That was announced today. So there's a lot going on in the market, there's so much going on with Senseonics as well. This FDA approval, a lot of this is like sell the news. People were really excited, so they ran the stock up. There's also a big short interest with this stock. Over 24% of the float is shorted on this stock. That's pretty high. Anything above 10% is high for a stock. Shows real pessimism in a stock going forward. And this is one of those companies that ran a lot over the past couple years since we've been covering this stock. This was a penny stock, penny, 40 cents, and then ran up to what? $5, above $5 in February of 2021. And this stock was hit super hard, really quickly, dropped to under $2 per share from February to May. So, and it's ran up countless times since then. But I think this is only a bump in the road for this company. I think they have a long road ahead of them. I think the stock market needs to calm down a little bit before Senseonics is really going to do some real damage on some of their competitors, Medtronic and Dexcom. So, guys, let me know if you're still excited about Senseonics long term. I am long term. I think this is just a blip in the road for this company long term. Another thing I want to touch on real quickly is the company expects full year 2022 global net revenue to be in the range of 14 to 18 million. That's a bit lower than expected. We were hoping that this was going to grow revenue. You know, when they had about 14 million in revenue last year, 14 to 18 million isn't a big jump in revenue now that they have this new FDA approval. Honestly, revenue, that guidance kind of sucked. That was probably another reason the stock did fall. So keep that in mind. when you're thinking about this stock as well. The last thing I want to touch on, very last thing I want to touch on is the next FDA approval we're waiting for this company is their 365-day device. That could be a year or two out for this company. So keep that in mind. If you like this share price here at around 250, 260, it may be time to load up after this big drop. But there could be more pain ahead in the market, obviously for small caps, mid caps, things like that, as the Fed holds that emergency meeting on Monday. The markets do not like uncertainty. We're expecting a rate hike in the middle of March. We're not expecting a rate hike in the middle of February. So on V-Day, on Valentine's Day, the day of love, the Fed could shock us and say, look, we're giving you a rate hike right now because we don't like these 7.5% inflation numbers. And that would spook the market. And we could see more pain ahead in some of these small caps. So guys, let me know how you feel. I would love to hear from you. If you want to see more of me, you can see me 5 days a week, every day the market's open, on the Tip Ranks YouTube channel. I would love to see you over there if you aren't subscribed over there already. As always, thank you so much for joining me for another video. If you learned something new, found any value in this video at all, you like seeing my face, whatever, hit like and subscribe down below. As always, I'll see you in the next one.